Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 4 o'clock in New York on Tuesday, the 30th day of December, 2014, and this is the daily report for gold and silver. Upside down and round, we've got this market moving up tremendously in double digits, only to move down and then back up again. That's what we're seeing today. Currently trading up again in gold, up about $17, just below $1,200 per ounce. Call it $11.99 currently. Now the low is $11.8140. The high is $12.11 even. Interesting day. Very, very light holiday trading. Extreme volatility within the market. Silver also trading higher this morning, and you can see on this daily chart this dramatic up day sandwiched by a dramatic down day yesterday, and then today we see it up about 2.5% or 40 cents higher. Low 15.75, high 16.58, current 16.15. More on silver in a little bit. Of course, when we look at these markets, we need to look at some of the outside influences. We do have the equities markets lower today. We have the dollar lower today. We have crude oil, though, trading still under pressure. Now, when we look at gold, this is our daily chart, continuous contract, our spot market chart. We've identified a couple of areas for very, very short-term support and resistance. I am putting major support right now at 1172, and that is based on this 38% retracement level. I'm also putting resistance at 1213, and that's based on the 76% retracement level of this same move. This is a shorter-term retracement, only looking at the move from 1238 down to call it 1130. So when we do that, you can see that as the market came up, it did find resistance right in this area, 1213. This is a number that we have identified before, and it's still a number that needs to be watched. In terms of support, secondary support above 1272 is 1185. We're currently trading roughly at 1298, and then of course 1200, of course, that psychological number. I'll be most interested to see whether or not we close above or below 1200 as we go into the end of the year. And one of the primary reasons I do have this interest, of course, is when we take a look at what we've done this year. This, of course, is a very, very long-term monthly chart, but here I've marked really where we were at the beginning of 2014 at 1200, and now at the end of 2014 we're once again at 1200. So although we did make a slightly lower low, and that is the 1131, in terms of a high, I believe 1391 was a high that we hit this year, but we've not had a tremendously large range, not when we compare that to what we've seen previously. But more importantly, the fact that we are really, really closing pretty much in the same point where we opened is something we absolutely want to take note of. So traders, we're looking at a half-a-day chart. This is the E-mini, and as many of you know, I am planning on starting up a S&P, Standard & Poor's E-mini trading service, first or second month next year. And so we've been assembling our charts, and we've also been adding our charts into the gold forecast. On a peripheral basis, I'm not looking to take these charts out when I do start the trading program for the S&Ps, because I think that they're so interrelated. When we look at this, you can absolutely see that we hit this record high. This was at around, I believe, 2080. The market did take that out for the slightest amount of time. You can see these highs, I think, at 86, and now it's trading at 76, slightly below it. But what really tells the tape in terms of the Standard & Poor's is looking at our weekly chart. And I've gone ahead and I've pulled up the Standard & Poor's weekly, and my only real concern in terms of this marketplace itself, this market is steamrolled, and we've really only seen one real small correction when we compare it to the types of corrections we've witnessed where we get that 23% retracement of a rally. But 2099, call it 2100. That's 150% extension. 161% extension, 2181. And so my question is, will we find some sort of resistance here and have a correction, or will we move up to maybe as high as 2181 and then get our standard correction? Because we know that historically speaking, the stock market tends to run in cycles of 5 to 7 years and then correct. We've simply had, when we consider call it 2012, 13, 14, 15. So we've had a couple of years. And so the real question is, will we find this market correcting here? Will it just barrel through this point and continue to track higher throughout next year? That is obviously the $64,000 question. So when we look at our oil chart, you can see that on the week, and of course it's only Tuesday, we are tracking lower, 53.86. It's hit a low probably of just about $53 per barrel. The candle size is getting smaller, and where we can really define the trend itself is to go to our Japanese average charts, because that really gives us more than anything a real indication, I believe, of where we're at. And when we do that, you can see that we've got these absence of upper wicks. That tells us that these are weekly charts, so during that week, it opened and always traded below the midpoint of the prior candle. And the body size, when you compare the actual range compared to these previous candles, is still actually fairly strong, which tells me that this particular downtrend, at least on a technical basis, has probably not run out of steam. Now, when we look at our dollar chart, this is our weekly dollar chart, you can see that we have hit a little bit of resistance. On the week, we are down on the week. When we look at our daily candle, which we've just done, and let's just make sure that that's properly updated, and it will take a second. You can see that the market has been moving up. A red candle will pop in the next time we get a print, but today is certainly down. But we've had this huge, tremendous rise within the market up until today's slightly lower pricing. So what, if anything, what information can we glean off of the activity over the last few trading days as we look at the outside markets, how they've influenced the price of gold and silver, as well as the price of gold and silver itself? And I can tell you it hasn't really given us much information at all. We've had a real choppy market in which we're seeing double digits up, followed by double digits down. My sense is, on a longer term basis, until we either break above this long-standing resistance line, which would mean we would have to at least attempt to take out this top at, I believe, 1254, or break through this major support line at 1157. Now, that is the 61 and 50% retracements. If you recall, on this particular chart, I'll have to compress it quite a bit, but you recall I've got two sets of fib retracements, both going to the record top, one starting at 687, the other one starting just above 400. And so this, to me, in terms of a line in the sand for the bulls, this is that line. Anywhere between 1157 and 1168. That is a line. Now, have we had lows below that? Yeah, we had the low at 1131. But I think on a big picture, that's really just a blip in the screen, so to speak, because this is the major area. A breakthrough here tells me we're headed much lower. A break above this particular resistance line tells me we've probably concluded our long-standing correction that began really, towards the end of 2012. So I don't really see a lot of information coming from that. We are flat in the market. We've got today and tomorrow to end the year. I think at that point we will have seen the volatility decrease in the market. Once we come back after the holidays, of course, we'll see the volatility return to normal, traders returning to their desk, and some real constructive activity that we can make some sense out of. So traders, what about silver? Well, I do believe that if we continue to see silver gold under pressure, we're going to see silver under pressure. It is at such an interesting point just trading above 16 like this, because below this, as you can see from the slip right after Thanksgiving here, it has the potential to go to $14 per ounce. So my question is, will this particular price point hold, meaning 16 we get in terms of any kind of technical support in the market? We've got one particular price point here. We've got this series of bottoms in here are showing us, if we extend that forward, why 16 on a technical basis has some credibility, but we'll have to see if that holds. Again, this is very, very light holiday trading, and I'm not making much of the recent moves over the last 3 days, because we've seen it rise double digits, fall double digits, now rise double digits again. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for the weekly and yearly wrap-up, because we will be at December 31st. And remember, our loyalty program is available until the 1st of January. Have a great day. Talk to you tomorrow. Bye-bye.